happening? What's happening? What's happening, everybody? Hey, how you doing? Doing. Good morning, good morning, good morning, good morning. Let me clear my throat. If y'all can hear me drinking that water, I jollipies. Let me take this sweatshirt off. It's cold in Columbus, Georgia, man. I don't know what's going on with this cold weather, but it's cold, and I feel like Mr. Rogers. Would you be my? Could you be my? Hey, good morning, good morning, good morning, everybody. Thank you, thank you, thank you. You're far too kind. I like to welcome y'all to. Let me get on my thing. I like to welcome y'all to Tim's Tidbits. This is the overnight price action for October 18th, 2022. Yeah. How y'all doing, man? If this your first time pulling up, I'd like to say welcome to Tim's Tidbit. Y'all see Spidey hanging out right back there. If this your first time pulling up, welcome. If this not your first time pulling up, you pull up every single day and hang out with me, I like to say welcome and thank you. Thank you. You're far too kind. I appreciate y'all, man. Y'all could be anywhere else in the world, but you choose to come here and hang out with me at 9 o'clock in the morning and at 7:30, 6:30, 7:30 in the evening, Monday through Friday. Y'all come hang out with me on Sundays at 3 o'clock. Y'all just be hanging out with me all the time, man. I appreciate it. Y'all say y'all got a notification turned on. Hey, I appreciate that too. Right? If you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet and just talk about the price action, talk about the stock market, talk about the economic stuff that affect the stock market, talk about where price action is most probable, the highest probability movement of the price action. If that's what I'm trying to say, what we think is gonna go, where we believe is gonna go. That's what I'm trying to say. We go on here and we discuss it as a family. Speaking of discuss as a family, if you look at the top of the chat, there's a link pinned at the top of the chat. It looks something like that right there. That link is there. So if you have a question or if you want to share anything, pull up, click on the button, pull up. You can come up, you can talk, you can show your face on the camera. You can not show your face on the camera, but I can hear you audibly and I can understand your question to perfection. And if I have an answer, I'll share it with you. If I don't have an answer, I'll say, so that's what we're going to do today. We're going to get into it. We're going to talk about, hey, how y'all let me get off live yesterday without going to see what was going on with Spalene? Who in the chat? Who in the chat? Here to learn and share. Good morning to you. The birds are chirping. Tweet, 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 tweet. Michelle Tucker. What's going on, Michelle Tucker? What's up, Tiffany? What's going on, Cameron? What's up, Mendez? Hello, Anna. Hello, Elsa. Good morning to you, Queen. How are you? You still walking away from us, Mendez. You're going to get another picture one day. Cool it now. Hey, watch out. What's up, Cool it? Oh, the live is over. Robinson is in the building. I appreciate y'all. That's it. I'll see y'all tonight at 7:30. What's up, Seawalk? What's going on, Thomas? Rhonda Green. What's going on, Rhonda Green? What's going on, Laverne? What's happening, Valdez? Buenos dias, Valdez. Buenos dias. Hey, how's Juan? Y'all remember Juan Valdez? The dude with the donkey? That it was like a coffee commercial. Juan Valdez. Do y'all remember that? Who remember Juan Valdez? What's up, Kareem? Haitian Pete. What Haitian Pete? What? Let me get a beef patty, 2 cocoa breads, and a Tahitian treat. What's up, Haitian Pete? What's up, Zay? What it is, my guy? That's it. I see more numbers than I see names, but that's all the names that I see. So that's all we're gonna shout out. Hey, let's go ahead and get right into it, man. Let's get right into it. Zay, get off my screen. Since we got the Al Gore's internet pulled up, man, let's go on over here and holler at our friend. Y'all know who she is. Sing it with me. Spalene, where you at, baby? Here I go. Hey, how you? Oh, wait a minute. Is that for real? 337, 374. But we about to have a mean gap up. We about to have a mean. Let me get my Ninja Trader open. Where's my? Oh, my Ninja Trader is open. Ninja Trader is open. Okay, it's already open. But we about to have a mean gap up. We're gapping all the way past this daily volume imbalance. That means we are past the volume imbalance on. Yeah, I saw that last night when I came in here last night, and we was past the volume imbalance. Well, we was at the volume imbalance on the ES. We're past that. We're past that. We're past that. What is this right here? What is this line for? Why do I have that there? I must have been. I don't know why I got that there. I don't know why I had a line there. And we're past this. All right, y'all. I'll just give my stuff together. That's a daily high too. Let me change that to a day. Let me shift that to the bottom so that don't overlap. That's a daily high. I changed the color. I had it marked as a 4 hour. I had it marked as a 4 hour because it was a 4 hour level. But now that I'm on a day looking at the daily chart, I noticed it's a daily high. That's why I changed it to that green color right there, to the high of day. I got to get my colors in sync because my colors on TradingView, some of them are different than because green on TradingView is day, but green on my Ninja Trader is hourly, and white is day on my what's the name. But since I got a white background on TradingView, I can't make the day white because it won't show up. So I be getting mixed up. It's y'all fault because I got this on white because it show up better on the live than it being on the black. That it's y'all fault that I'm confusing myself. Anyway, we about to have a massive gap up on the SPY. We in accordance with our look back, we are full steam ahead for the first high. Remember, we was talking about the IPDA trading range for the look back, right? We got the IPDA trading range within the first 20 days. This was the first high. This was the highest high within 20 days. This is the 20-day line. If you can see that red line coming over here, and it's the 20. Let me shrink everything down so y'all can see it like this. Let me hide this other stuff real quick for anybody who on here that don't know what I'm talking about. If I take away the lines, see them those are the IPDA trading range lines. That's blinking back for, you know what I'm saying? So when I put it on yesterday, even if like I just leave it on yesterday because it's just one day over. If you look 20 days back, this is the highest high, right, during them 20 days, and we just ran through some significant lows, right? And so now looking 20 days forward, 40 days forward, 60 days forward, right? These are like the highs. Now that we've run these significant lows and reversing, these are the highs that we're, targeting within these days. Like these are up to the six. This is the highest high within 60 days back. This is the highest high 40 days back. That's another high 40 days back. This is the highest high 20 days back. And that's another high 20 days back. So looking forward 20 days, 40 days, you know what I'm saying? We looking, if you look 40 days forward, you expect to be done taken out at least these highs back here, because that'll give you a 60-day range from there to there. That's 60 days. So you're looking to at least take out this high right here within that time frame, or even this high and that high if the market is that bullish. But if the market is not super, super bullish, you're looking to at least take out these 20-day ranges within this 40-day. But the way we're pushing is like all all steam ahead for this one right here. If we keep pushing like we pushing, we can take that out today or tomorrow on the first high, and then the highest high within 20 days back. That's a stone's throw away, and that's up there at what is that right there? 389.29. And then the one that we gunning for right now is like at what, 379.58 is that? So let's just say 380, 379.46. Let's just say 380, close enough for government work. So we wanted to peek at the data range for a hot minute. Let's look at the price action since we about to gap up. Okay, looking at the price action for overnight, we are right up against that daily high. When I remember we was talking about we had a volume imbalance, and I was like, I want to see how we react to. Let's go back to the daily chart real quick. I already took the stuff off. So for anybody who don't remember, right, we were, God dog it. For anybody who don't remember, yesterday at the close, we was talking about, I said I wanted to see how the market reacted to this high right here, this daily high here, right? I want to see how the market reacted to that high, and I want to see how the market reacted to this volume imbalance right there. That's what I was waiting to see, what the market, how the market reacted to it. And as y'all see, we slapped through both of them. Went through, slapped through both of them, right? Since we blew through both of them, y'all, I don't know if y'all can see it. Let me what you say? I see a question. I see a dissertation. What's up, Russells? The Russells popped up in here. I'm gonna get to that dissertation in a minute. What's up, Lil Hawk? What's going on, man? What's going on, FC? What's the purpose of looking at the SPY for gaps and imbalances if you already do it on the ES? Don't it correlate with each other? Yes, but everybody don't look at the ES, so I just look at it on the SPY so that the people who don't look at the ES can get the information based off of the SPY. Yeah, that's why I look at it. That's just for people who don't look at the ES. I just use the ES to trade the SPY. Everybody don't use the ES to trade the SPY. That's just the way I do it. So I look at the SPY for the people who only look at the SPY. Let me darken this up. Can y'all see that premium and discount? Y'all, I don't think y'all can see it. Like when I'm looking at it, I can see it, but I don't think. Let me darken it up a little bit for y'all. You know, 10. Okay, so but this is right here for anybody who don't know. I got it. I got the dealing range broke down in quadrants. I don't have the bottom marked out like that because I get tired of looking at all that junk on my charts. So the way we pushed up, right? We're back inside looking at the dealing range from the high over there on the 5th of October, and then the low is on the 13th of October. This is the complete dealing range, and then we're hanging out in the premium. So I got the premium broke down into the discount and premium area. This is the discount of the premium, the green shaded area, and this is the premium of the premium, the red shaded area. So, and then the same thing will be down here on the bottom, but the market is pushing up so far. I didn't feel like putting all that other junk down here but if we start selling off super bad and we do come down here, then I will mark it out. But for right now, I'm just looking at the dealing range that I feel that the algos are staying within. It feel like the algos are staying in the top quarter, the top quadrant, like these two sections. It's dealing in this premium and discount of the premium up there, right? I don't expect it to swing all the way back down below this line and give us a discount entry. So that's why I broke it down between premium and discount in the premium section, right? So that's why I have that like that. Now looking at the overnight price action, let's look at overnight price action and see what we did. Okay, where's mine? Okay, this is the close right here. Okay, so this is the close. This is the close from yesterday. We gapped up. We gapped up almost to yesterday's high. On the open. Then we went up. It's an hourly and a 4-hour fair value gap right here. I got the 4-hour marked out, but it's an hourly there too. Retrace back down a little bit. Blast off. Ping out. Got the ping out. Breaking market structure to the upside. We came up. Let's see. So we ping out. We took out this high. We got into the volume. The volume imbalance would have been right around here somewhere. Let's go back and mark that out real quick so we can see exactly what happened. Mark that out very quick. Very quick. Give me a rectangle. Okay, so we had the volume. God dog it. The volume imbalance. The daily volume imbalance was, God dog it, right here. Okay, that was that high. We know we took that out. So go back to the 60-minute candles. So we got we got the ping out, broke through the high, right? We took out the buy side liquidity, right? Touched the volume imbalance. Then we wicked through the volume imbalance, came back down, price respecting the volume imbalance. We started consolidating right there. Then we got the retrace back to the breaking market structure into this fair value gap, this hourly fair value gap. Then we came back down, all the way back down to this breaking market structure. So first time we came down to this breaking market structure, pushed back up. Then we got the sell-off, came a little bit deeper into the into this fair value gap. And then we came all the way back down, playing just short of this breaking market structure right there. And then we got another ping out. We took off again, got another breaking market structure to the upside. And we stopped just short of this daily high. Then we go wick for wick. This daily high is at 37.76. And the high on this candle is 37.76. So we went wick for wick with this daily high right there. And that is the overnight price action in a nutshell. We now have sell side liquidity. Get this, move this up a little bit. I'll move it up out of the way. 37, just put it at 65. Get this out of my way so I can put that there for now. Let me mark this low. This is an hourly low right there. Let me check the 4 hour real quick, see if that's a 4 hour low. It is. It's a 4 hour low. So I'm gonna I'll leave it at the hourly because it's an hourly swing low. It's not a 4 hour swing low. So I'm gonna leave it at an hourly. It's an hourly swing low. All right, that's where we at on the overnight price action. Let me share something with y'all that I was understood. Thank you. But say a white chart might be better for your eyes. You're right. You're right. A white chart would be better for my eyes. Hey, Robinson, read between the lines, Robinson. Read between the lines. Hey, let me share something with y'all real quick. Do anybody got anything? If anybody got anything, drop it in chat. If anybody want to share anything, pull up. But let me share something with y'all real quick. I've just been like kind of peeping this. I haven't gone back and back tested it yet, but I just been kind of forward testing it on a different screen. I just been forward testing it on a different screen, and it's ICT call it the what does he call it? What does he call it? I got it inside my fibs. I got it inside my fibs. Let me go in here. Templates, load. Central bank dealers range. Central bank dealers range. That's what he called it. Let me share something with y'all that I just been peeping this. I ain't tried to trade it. I ain't tried to back test it yet, but I just been peeping this. I'm gonna share this with y'all real quick, and then we're gonna go ahead and call it. So from he called the central bank dealing range, and he be talking about it in one of the videos in the core content about projecting like the daily range and stuff like that. So he say look at the 2 o'clock candle. So let's go to let's go to 2 o'clock. So yesterday, what was yesterday? 17th, right? 17th, 2 o'clock p.m. right? So the 2 o'clock candle and the 8 o'clock candle, the 8 o'clock hourly candle. 20, right? So the 2 o'clock candle and 8 o'clock candle, right? So he called this the central bank dealers range. So looking at like the low, like use the wicks and the bodies, right? So using the wicks on the 2 o'clock candle and the 8 o'clock candle, right? One standard deviation up, because he talk about, I'm about to sneeze. He talk about like longest that range from the 2 o'clock candle to the 8 o'clock candle is within like 40 points or less. You know what I'm saying? He be talking about pips, but 40 points or less. Then he look at the high being made preferably in the London, the daily high being made preferably in the London being within 1 to 2 standard deviations away from that dealing range. And it can be, the high can be made up to 3 standard deviations away, right? And then he say he prefer to do it off the bodies, right? Off of the bodies, because that's the most of the volume, but he keep in mind the wicks also. So looking at all of that right there. So with the bodies itself, 3 standard deviations away would be this high over here. That would be that high, that first high, that first high in the dealing range. Or was it the first high? Let's see. It probably was this high, that first high in the 20-day look back, right? That would have been that first high probably. Let me see. Yes, that first high in the 20-day look back, right? And that's 3 standard deviations away from that dealing range right there from yesterday. So 3 standard deviations away from the central bank dealing range will put us right at that and as you see right there, put us right at that high. And then if you do it with the wicks, if you do it with the wicks included for that time, include the wicks, it puts us just above it, right? So with the bodies, it'll be, you know, just breaking through it, and with the wicks, it'll be a nice flush through it, right? I've been peeping that out lately. I ain't been trying to trade it yet. And if you look on my ES chart, I got it marked up pretty good on my ES chart. Let me go to hourly candles. Right. If you look at my ES chart, I got it marked up pretty good. So that's like the pink line. This right here, as you see, I had this marked out. This was a breaker. This right here was a hourly breaker right here, and this was the open of the breaker. Like once we broke through, this was the body of the breaker, this green line right here, and then the box was like the breaker itself. So as you see, when we broke through, we went to 1 standard deviation. We went to 1 standard deviation, including the wicks, because the light pink line, that's without the wicks. the dark pink line, that's with the wicks. So that's one standard deviation. That's two standard deviations without the wicks, with the wicks, and then three standard deviations without and with the wicks, right? So that's from that dealing range. So we went one standard deviation with the wicks, then we came back down to this breaker, touched the opening of the breaker, and then we took off again. Pang out. There you go. And then we broke. Wait a minute, did we? They lined up a little bit different. Like the wicks are different between the ES and the MES. This wick on the MES is higher than this wick on the ES. Y'all see that? Because the wick on the ES right there, it's lower than the wick on the MES. It's actually a lot lower. Because where we at now on like looking at MES, we making equal highs right at that daily high. And where we at on the ES, we already broke that daily high. Yeah, so them wicks are a lot different. Yeah, it look like two eyeballs right there. Yes, those wicks are different. Those daily wicks are a lot different right there. That is peculiar. So yeah, man, I just want to share that with y'all. That's something that I've been watching. I ain't go back and back test it yet because I've been kind of busy, but I just been watching it in forward testing. You know what I'm saying? On like a different screen that that y'all don't be seeing. But I just want to share it with you because it was like playing out kind of nicely today. And then but that can be, you know what I'm saying, you can use that for potential targets for the high before a pullback or a reversal. You can use that for potential targets for highs. Like it's clear that this is not going to be the daily high. One standard deviation is clear, it's not going to be the daily high, right? Will it be two standard deviations without the wicks or with the wicks? Will it be three standard deviations? You know what I'm saying? Without the wicks or with the wicks? You know what I'm saying? Like we never know what it's going to be, but you can have a target. You can have a target, be like, okay, if I see a reversal at two standard deviations, right? If I see it start pulling, like right here, it started pulling back at one standard deviation, right? During the London, right? This was at 1 o'clock, this inside the London kill zone, right? And then it came back down to this breaker at 6 o'clock, hit that breaker and pang out. That would have been a good short during the London. You know what I'm saying? You got the one standard deviation. If you was up during the London, you got the one standard deviation, and then it showed you, it gave you like a reversal setup. You could have taken a short with confidence because it hit that standard deviation and started giving you a retracement, and then you could have taken it down to this breaker, right? Once you hit that breaker, you know what I'm saying, you could have gone long off of that breaker. Boom, you hit that breaker and took off, you know. But that's just like it can give you a target for the low. And then this down here, I got this marked out just in case we started reversing in the middle of the night. This was one standard deviation to the bottom with the bodies only, and one standard deviation to the bottom with including the wicks. But as you can clearly see, it was all gas. So it's like once I saw it was all gas, I just mapped out two standard deviations and three standard deviations to the top side. I didn't map out any more to the bottom side. You know what I'm saying? So you can like use that as a target of, okay, we can potentially reverse here. We can potentially reverse that. You know what I'm saying? And like how we just made that long with, oh, that is Towns. The microphone open, Towns. I don't want to talk to you. What's going on, my guy?
Hey, what's up, my guy? How you doing today?
Chilling. What's up with you?
Not much, man. I got a little question for you. All right, so I've been taking a couple positions. Like I'll take one or two short positions on Ninja Trader. Is there any way to close out one and let the rest run, or do I? Because most of the times when I put a close in, it closes both positions on me.
Yeah, cause you did you ever the market is open, the market is open, the market is open. If you gotta go trade safely. I appreciate y'all for pulling up. Just do me a favor and hit the like button on the way out the door. Did you ever get the license that let you trade the ATMs?
Oh, so all of it's still packed inside of that too. Dang.
Yeah, cause it's like it's not letting you it's not giving you the option to like do OCO orders. It's not giving you the because the only way you can take a piece of it off is to be able to break it down with like different OCO orders where you like you can right click on the screen and say sell one or right.
Okay, sorry about that.
I just heard my thing say order filled.
Yeah, mine did too. Nah, that was me.
Oh, that was you. Oh,
Yeah, that was me.
I thought that was me because I had my other platform open up. I was like, man, the voice sound funny. Cause like hit
Nah,
like on that platform, it's a dude voice. It'd be like order filled. You know what I'm
yeah,
saying? I'm like, wait a minute. But
nah, that was me. That was me.
yeah, so yeah, you would have to be able to like right click and like sell, like you would have to be able to use the chart trader, you have to be able to use the ATMs to be able to take piece of the position off. Like with the one you got, you can only take the whole position off because you can't break it down. It's not letting you break it down and do like the automated trade and automated
Mhm.
trade manager where you can say take one contract off and leave one on, or take, you know what I'm saying, you can't use chart trade, you can't do none of that, so it's not gonna let you get off piece of the, it's not gonna let you shave.
Okay, okay, that makes sense. I was thinking that was the reason, but I wanted to come on and just kind of check with you to make sure that's the reason why. Okay, I got you.
All right, you got a bird.
Nah, that's those alerts on TradeV, like when price points hit what you're looking at.
Oh,
That's
okay.
what's going
Oh, I thought you had a parakeet on your shoulder.
on. Nah, I had a position going short, so it just took it.
You say you got a position going short.
Hmm.
Oh, you risky Roger today, huh?
I am. I'm just looking at a little pullback because I'm doing some calculations. I do a lot of my trading on the SR lines too,
Yeah.
so I kind of mix that with the fair value gaps. And if I get a
Man, stop fighting this train, man. If we full steam ahead to the bottom, go short. But when we full steam ahead to the top, look for reasons to buy.
dude, I know what you're saying, man, but I I'm gonna be honest, man. I think the only reason this train going because of the banks. I listen to what you say, and the one thing I appreciate is that I do believe they taking this up to drop this down. I really do because I'm looking at the CPI numbers and everything like that, and I'm like, yeah, I can say what y'all want to say. The banks look good because the interest rate. Everything else ain't looking good. And if you could take it up to a premium before all the technologies drop their info, you good to go. And so that's what I'm looking at right now. I think it's gonna get there. But okay, so I gotta get that.
Bruh, don't fight this train. Don't
I
fight this.
feel you, man.
Hey, don't get stuck in your bias. Trade what you see. Trade like I'm not saying the market bullish. I'm not saying the market bearish. Trade what you see. Trade. Use the tools that ICT teach us, and just keep your thoughts and opinions out of it, and just trade what you see. If the market full steam ahead, don't try to fight it by going short. Like, I mean, it's cool if you just want to get a quick scalp going short, but it is more lucrative just to ride with the market. You know what I'm saying?
Yeah,
It's more lucrative just to ride with the market.
but you know like I'm having to change my whole mindset because that's what I was, a scalper, man. Like before, I really just started following you, listening more to ICT. I was just a scalper, so I'm having to change my whole mindset now. You know,
But you can scalp with the market. Don't
Nah.
you don't have to be a contrarian scalper. You can you can scalp with the market. But if you going with the market, it's like, just say, let's say you going with the market, right? And
Mhm.
you plan on scalping, right? You plan on
Right.
scalping. Which, if you ride it with the market, just say once it start making the move, right? Then just well, I don't. You probably I don't know if you can adjust your stop loss anyway. But I was gonna say it's just with me, it just make more sense to ride with the market. But hey, do what you do, man. Do what you do, man. Trade your book. Don't do what little Timmy Rogers do. Oh,
I feel
he'll
you.
learn his just say you a bear at heart.
Oh, I'm 100% that. Until we get out of CBI numbers, I'm 100% bare
The
heart.
biggest bear in the forest.
I'm
The
pretty
biggest
darn
bear
close
in
to
the
it.
forest.
Pretty darn
Chris
close to
say
it.
news is bullish plus retail bullish and ICT is bear. Oh yeah, news bullish, retail bullish, ICT bearish. But yeah, man, just I mean, trade what you see. Like, okay, for example, okay, you wanna, it's like you want to take a short. Like, just for example, what I was just talking about, like what I was just sharing with the thing I've been just testing out in the background, right?
Mm-hmm.
We already went through one standard deviation, right?
Right.
Up from the range, right? And we look it up here, just say we get up to like two standard deviations, right? And then you'd be like, okay, at this area, I'm gonna start looking for reversals once we get two standard deviations away. And then you'd be like, okay, two standard deviations with the wick is like really close to this high. So I might wait till we get three standard deviations away before I start looking for shorts or whatever. You know what I'm saying? Like if you really feel like okay, it's gonna drop, look for the shorts in the areas based off the tools he's given us. You know what I'm saying? How to ip the algos work, right? And you see how this was a nice short coming off of this one standard deviation from the central bank dealers range. You know what I'm
Mm-hmm.
saying? And then when you get to a net like trying to short like right now is like that's a true scalp. But like when you get to the next one, looking for a short at the next one, it might be more lucrative. Like you know what I'm saying? Like use it to your advantage. Hey, I'm a bear. I just want to go short, but use it to your advantage. Okay, boom, we hitting this central bank dealers range once two standard deviation. I'm gonna start looking for shorts. You know what I'm saying? Dealing in time and price. We're in the New York kill zone. We're in the London kill zone. I'm looking for my short here. You know what I'm saying? And just use it to your advantage.
Nah, I feel what you're saying, man. I definitely agree with you on that.
Yeah, yeah. Don't even, you know what I'm saying? Like if you a bear, be a bear. Like I'm only looking for shorts, but use it to your advantage. Don't, you know what I'm saying? Don't, you know what I'm saying? Just hop in like, okay, I think this a point. I think we done went too far. Nah, don't think we done went too far. Use the tools and be like, okay, this is a nice place where it's gonna give it a break. You know what I'm saying? And then also be, you know what I'm saying, be in the mind frame of, okay, if you see the market start consolidating, what I do when let me drop this for a second, right? So when you see how right here when we started consolidating right around this area right there at this one standard deviation, what
Yeah.
I'll do, I'll go to like the high of my time frame that I'm my dealing range that I'm watching. I'll go to the high of that, and then I'll just start moving it down. I'll start moving it around until my 50% get like close to that area right there. You see what I'm saying? See how when I came like almost to the middle of the dealing range, it put me at that consolidation. And I was like, okay, the algos using turn the snap off. I said, okay, the algos are using the premium as the dealing range. Because when I come to the discount to the high, right, it puts me right there where we started consolidating in that area right there. So that's when I was like, okay, the algos only using the premium side, and that's when I broke down the premium into the discount and the premium. And as you see, once we came out of consolidation, we came to this breaker in the discount, then pow. You see what I'm saying?
Yeah. Nah, I definitely understand that. I
Like
understand what
use the tools that he gave us to the advantage. And so it's like you'll be able to say, okay, now I see the dealing range that the algo's looking at. This would be a good place for me to be looking for a short because now we're in a premium, right? We're in a premium in the dealing range the algo's looking at. When we get up here to like one standard deviation without the wicks, right? If it
saying.
starts to give you a reversal sign, that may be a good spot to take a short. Right, if it blow right through that and get up here to two standard deviations with the wicks and start giving you a reversal sign, that may be a good place to start looking for a short because it's in the premium and it's two standard deviations away from the dealer's range. So now, you know what I'm saying? it might be time to take a little break and pull back. You know what I'm saying? Just start putting the tools together to look for the shorts instead of just saying, hey, I think we done went too far. Let me just go short here because, you know what I'm saying, I got a break in market structure on the 5 minute. You see what I'm saying? 5 minute, that's, you know, that's way down there on the time frame. But when you start looking at the higher time frames in accordance with the overall thesis, then you can, you know what I'm saying, it'll give you a better chance of trying to take them little quick pop shots. Pew, 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 pew.
No, I definitely feel what you're saying, man. You know, man, it's trying to change my whole mindset and how I
No,
trade.
don't change your mindset. That's what I'm saying. Don't change your mindset. Like, you know, you, like, I know me and you know you. You got to trade what works for you. Don't try to change and be somebody else. Play to your strengths. You know what I'm saying? Yeah. Know your weaknesses and play to your strengths. You see what I'm saying? Don't try to change you. Just use the tools to your benefit. You know what I'm saying? Yeah, that's just like when I was doing photography and videography, right? When I got this little cheap camera here, you know what I'm saying? Little cheap camera here. Then I got this not so cheap camera here. You know what I'm saying? But I could take a picture and a video on this cheap camera and make it look like it came off this not cheap camera because I know the limitations of this camera, and I stay within the limitations, and I use what I know to my advantage to, you know what I'm saying, exploit the most I can out of this camera. And then people, because I've shot people weddings and had this little cheap camera out there with me, along with this camera and along with the one that I'm using right now. And when I splice their wedding video together, they never know that I had this $500 camera working along with this $6,000 camera. You see what I'm saying?
I definitely see that, man.
So yeah, don't try to change you. Just use the tools to your advantage to, you know what I'm saying, bring the most out of your trading style. Because if you're trying to trade somebody else's trading style, you're never going to be successful.
I can definitely agree with that, man. Definitely can. I think that's one of the biggest things I learned in this whole journey of mine. But I mean, you know, the fair value gaps is like amazing. That just added a whole nother level to it. So appreciate your explanation always, man.
Yep. Hey, Chris, the New York kill zone is from like 7:30 until it's like 7 or 7:30 until 10 or 11. On the old free videos, he said 7:30 to 11, but in the mentorship videos, he said 7 to 10. So it's like, you know what I'm saying? And then with the London kill zone on the free videos that he put on YouTube, he said 3 to 5. But in the mentorship videos that he just dropped, he said 1 to 5. And he was like, you know, this is the real time that I use. He was like, the time frame that I put out on my free content, it was from 3 to 5, but I actually watch it from 1 to 5. So it's pretty much just say from like 7:30 to like 11 o'clock. That's the time frame that I deal in. That's the kill zone for New York, and then I'll be watching it from like 3 to 5 for London, but he says it's actually like 1 to 5 for the London kill zone. Can you use to project for the New York Open? No, you don't use nothing for the New York Open. The New York Open is the New York Open. When they ring that bell at 9:30, that's the New York Open. You don't use it to project for that. You use it. You use the he used the CB the central bank dealers range for trying to project the daily high and the daily low. That's what he was like, and he said it's ideal to get the daily high at 2 standard deviations and in the London. That's ideal. You know what I'm saying? So you can get the daily high in the New York, you know what I'm saying? But as you see, we already went past 1 standard deviation already. So the daily high could very well be 2 standard deviations. But then that's when you start looking at, you know what I'm saying? Because he said it can be up to 3 standard deviations away. ideal is 2, right? And he look at it without the wicks, but you want to keep in mind with the wicks. That's why I marked it out twice. And then so when you get to those areas, that's when you start looking like, okay, are we going to keep pushing past it? You see what I'm saying? And then like me, just looking at where 2 standard deviations put us without the wicks and with the wicks, that's very close to this high. So I'm like, okay, if we get up here today at 2 standard deviations, I'm expecting it to go ahead and take out this high at 3 standard deviations. I ain't like, y'all already know how I feel. Like if we come this close to that high, that's the target, especially when you look at it. That's the start of this market maker buy model right here. If we get all the way up to here at 2 standard deviations with the wicks, right? This is the target to me for this buy model, because most time when you form a market maker sell model or buy model, the target is the opposing liquidity. So if we get all the way up there, that's the target in little Timmy Rogers' mind. And we're getting a little pull back there off of that. We poked through the high on the MES, getting a little pull back. Like I say, them wicks are like crazy different between the ES and the MES. The ES, the high is down here at 37.70.50, and on the MES, the high is at 37.76. It's like a 6-point difference between the wick on the ES. The ES is 6 points lower than the MES. I don't know why those wicks are so different. Let me see if they look like that on TradingView. Let me see if them wicks look like that on TradingView. I don't even have the MES on here. Let's go to the ES. All right, so this wick is at 37.70.50, and on what's name? Wasn't that 37.750? Yep, 37.70.50. That's what it is on TradingView. And now let me see about the MES. MES. And then this wick is at 37.76. It's the same way on TradingView. The wicks are like different. 37.76. I don't know why they like that. I don't know why they're like that. That was the MES, right? They clicked MES, right? Yes, MES. Yep. 37.76. Yep, 37.70. Yep, they're different like that. My notes from the primer series said 7 to 9 as the New York kill zone. Yeah, 7 to 9. 7 to 9 New York kill zone. There you go. I think he mentioned 7 to 10 in some other videos. Yeah, close enough for government work. Fair value gaps is a cheat code. Fair value gap plus fibs is a cheat code. Yes, it is. Yes, it is. Hey, man, that's all I got, man. Appreciate y'all for hanging out with me. I appreciate y'all very much for hanging out with me. That's all I got. Where did y'all go? I covered y'all up. Yeah. I appreciate y'all for hanging out with me, man. I'm sit up here and watch this market, see if I can see a little something. If it give me something, we kind of look like we just kind of dilly-dallying a little bit. We had a nice little pull back down to. We came down, got close to a 15-minute fair value gap. And then we starting to wick back up. Got really close to a 15-minute fair value gap after that breaking structure. Yeah, so we consolidated here. We got that braking structure there. We came down. Okay, bro. We got this break. We got a 15-minute breaker right there. We got a 15-minute breaker right here. Got down into the wick of that 15-minute breaker. We push it back up just a tad bit. Let's see how that work out. For anybody who don't know why I'm calling that a breaker, is because we had this high that broke this low, bounced off this breaker here, and then we traded back through that counter there, came up here, and now so this right there is your breaker. Right here, that's your breaker. That's the body of the breaker, and then including the wicks. If you include, Jesus, give me strength. If you include the wicks, that's the entire breaker there. As you see, we got into the wick of the breaker and bounced back up. So you had a breaker, a fair value gap, and a breaking market structure. Man, that was a beautiful setup right there. Y'all get off my live, man. Y'all making me miss trades, man. So we got a breaking market structure. We got a breaking market structure, fair value gap, retracing back to the fair value gap, and we stopped at the breaker. We stopped within the wick of the break and we pushed up. We didn't really get into the fair value gap on the 15-minute. Let's see what it looked like on 5 minutes, see what's going on. Okay, so on the 5 minute, same thing. It's a teeny fair value gap. We came back down to, didn't really get into it, but it's like right there at the wick of the breaker. We're flirting with this breaking market structure right here to the downside, but we're not closing below it on the 5 minute. We didn't close below it on the 5 minute. Right here, we came down. We wicked back up off of this breaker right here. Let's see how this play out. Let's see how this play out. If we get a breaking market structure and start pushing, because we're in the premium. We're still in the premium. I don't know if you can still see those lines. When you're up this high, it's scary for little Timmy Rogers to be trying to buy anything because we're in the premium. Let me darken this up for you. I don't like when I'm in a place like this. Like I feel like, hey, I've missed the long move for right now. I needed to come back down to a discount for me to participate in a long move. I know my white lines are going to disappear if I do this right here. So like that. Now my candlesticks look crazy. Try to do like a gray so that it don't. Because if I go all the way white, then my white lines are out of there. So let's try to go to like a gray. And then let's go to the candlesticks. Black. Oh, they look nasty. Oh, they look disgusting. Oh no, I can't do this. That looks absolutely. Oh, it don't look that bad. Don't look that bad. Let me see if I can get a lighter gray. Let's see if I can get a lighter gray on the because I'm trying to get that what's name to stand out without making it too dark. Tripping. Oh, we pushing down real nice right now. Push down real nice right now. Where's my don't know why I'm doing all this. I don't know why I'm doing all this. I don't even know what I done changed. I don't know what all I done changed. Okay. I'm about to close this and not save it so I can get my screen back looking normal. I'm about to close this and not save it so I get my screen back looking normal. But I was just trying to get to the fact that we were still in the premium area, in that red area. And then this is the discount area. Right there. We're still in the premium area. All right, we're still in the premium area. I was just saying I needed to get back down into the discount for me to, want to participate in buying. It's like I'm scared to try to participate in buying when we up in the premium like this right here, because we're in like the premium area for like all dealing ranges that we're in. Even if you're just looking at today, if you're just looking at the dealing range of today, let me see where we at before I even say that for real. Where's get out of here, you ugly screen. Okay, this is midnight. No, actually, we came back into a discount for the over midnight. We came from midnight, from the midnight time up until now. We came to a discount for, if you're just looking at from 12 o'clock. If you're looking at from 12 o'clock, we actually came almost back down to midnight. And then if we look at, let me see, what was yesterday's candle? Oh, yesterday's candle way down there. Yeah, we're not in the discount from yesterday's low, but uh from midnight it would have been. We came all the way back to midnight almost. Anyway, now you can't control Z on Ninja. If you hit Control Z on Ninja Trader, that just it does OCO orders right there. See how the OCO popped up? When I hit Control C, it pop up OCO. It make it go into OCO order mode if you hit what's the name? I don't know how to undo. Um when I go into the property box, there's no undo button up there. They don't have an undo button up there. They have like different things where you can hit like presets, but on this one here, I don't it don't have like the save, the load, or whatever. I'm just gonna close it and not save it and open it back up. Hey, I'm gonna go ahead and call it, man. It's we've been on here for 59 minutes. I ain't got nothing else for real. I appreciate y'all for hanging out with me. I'll see y'all tonight at 7:30 for the price action recap. If you're gonna trade safe. If you're just gonna watch, take copious notes. And I'll see y'all at 7:30, man. Appreciate y'all. Gone.